Did the ice melt?
What audio, Jen? What audio? Is this audio any better? I have a choice. Which audio sounds better? That one?
Well, it's not you. It's that it echoes. So that one's not good.
How about this one? Is that any better?
I don't know. Sounds better. No, that one was good. Leave that one.
Okay. I never know which audio I'm working on, so.
No, that fixed it.
Okay.
And we got proper light on you today, Charlie.
I know.
Not the Prince of Darkness like last time.
Or in the Witness Protection program last show.
Although the Prince of Darkness look was foretelling.
I am bared up, completely bared up.
Think we're seeing some crickety cracks opening up here.
I do too.
Not in banks. Not in banks.
Not in banks. Oh, JP Morgan is the safety trade. Come on.
We'll talk about regionals today. There's nothing bearish about them.
That's where you go hide.
Well, that has been my preferred long. Has been the regionals, U.S. Bancorp and MTV. And that's what I've been writing about, is that the fundamentals of the regionals, I think, have sustainability. The fundamentals of the big capital markets, short term, I think, are vulnerable.
Yep. And you foretold housing, and Bakes foretold some Bitcoin shorts.
Yeah.
So you guys have been on a roll. Anyway, let's get this show on the road.
Rock and roll, hoochie coo.
Before we do, let's tell everybody we're here. Give everybody a minute. Not that my followers are going to make a difference, but.
Yeah. Steve, I'm just two things I'll touch on. One is housing, and the other is the bank conference next week. So, but nothing, earth-shattering. Just
I'm curious what you think this Trump housing initiative is going to look like. You get a home, you get a home, you get a home.
Yeah, the administration seems to try to be downplaying it, but I think it's an important proposal. The home builders certainly rallied on it.
Yeah,
and
good.
As did the building products company. Building product companies might be the safer play.
Can I ask you something? Maybe both of you, but Charlie, everybody goes bananas. Oh, the independence of the Fed and Kevin Warsh, and the bond market rules everything. If the Fed president does something, or the Fed itself does anything that the bond market doesn't like, they're the final arbiter, right? I mean, they're going to lower rates because of Trump. Well, if the 10-year blows out 5, he's not lowering rates. He's just not. I don't get it.
Yeah. One of the tactics they're trying, which is kind of ironic because it's what Janet Yellen did, and they criticized Janet Yellen for it, but they're trying to starve the duration trade. So I don't know if you followed the quarterly refunding announcement, but there was no new issuance.
Letter by letter. By letter.
And,
I'm an insomniac, so.
They're trying to create a scarcity value for long bonds to bring that down. There is a danger to that. We've had an increasing incidences of what we call fails to deliver. And that means you can't find enough quality collateral to deliver your shorts on your shorts. So that's a dangerous process that is emerging here. But and I think it gets even tighter in the second quarter. I think bill issuance would drop dramatically in the second quarter because of the tax refunds that they're anticipating. And Besson has rebuilt that TGA, the Treasury General Account, quite substantially. So it's going to be interesting in the second quarter, I think.
All right, let's get this show on the road, boys. Ready?
Boogie chillin'.
Yeah.
7:05. Let's do it. Welcome to Wall Street Beats, everybody. I'm Steve Lamar. I'm joined by our financials and banking pro, Charlie Peabody, and our momentum and technicals pro, Kevin Bakes Baker. It is Thursday, February 5th. Valentine's Day is right around the corner, gentlemen. Don't forget.
Amen.
Um, let's talk some banking stocks with Charlie. I know he wanted to talk to us about some money center banks and his home building stocks, and I think Bake's got a few up his sleeve as well, including his thoughts on Palantir, and I might question him on Microsoft and a few of these other moves
Bring
we've
it.
seen in the last couple of days. Given Google's big capex spend, everybody's saying that's too much, and Qualcomm, yikes, and I don't know what else, Charlie. What were you looking at this morning, Charlie?
Well, let's start with the banks, and then I'll hand it over to Bakes to make what observations he wants about bank charts, and then we'll come back and do home builders second. How's that sound?
Done.
Perfect.
So next Tuesday's a banking conference, and I wanted to highlight that because this particular conference, you know, sometimes you get updates, sometimes you don't. You know, we're only a month after the banks reported earnings in mid-January. Those earnings reports were very robust, very constructive, very strong. You know, and the one item in those reports that I was particularly positive about was the acceleration in net interest income (NII), which is top line revenues or spread income. And you saw that accelerate as the year developed, and it was fueled by increasing loan demand. Um, and so that's the play there is on the regionals, and that's what I've been positive on is the regional banks. My two picks have been M&T, MTB, and U.S. Bancorp. So I like the regional banks. It, what will be interesting next week, as I said, typically you don't get a lot of new news just because the banks just reported. But if there is new news, it's going to be on the capital markets front. And that news is likely to talk about the volatility that's emerging in capital markets. And if we get some commentary about the volatility being bad volatility and a deleveraging, um, it's going to work against the capital markets names like Goldman Sachs and Morgan Stanley and JP Morgan. And so I think that's the risk. Now, I'm not anticipating anything, but the good news has already been given to us. So there's not going to be any more good news. So the risk is you get some bad news, and we maybe don't get any news at all. But the risk is you get some bad news, and if we do get some bad news, it's going to be on capital markets. So from a risk reward point of view, lightening up on the JP Morgans, the Goldman Sachs, Morgan Stanley's going in next Tuesday is the risk reward trade, if you will. But at the moment, I'm not anticipating anything new. We'll see how Bitcoin trades here in the short run, because there is a deleveraging factor associated with Bitcoin. Some of you who know me know that last about a year ago, I started writing about the parallels between today and 1907. And the big thing in the panic of 1907 was
They've won.
the failure of the Heinz brothers, along with Charles Morse, to corner the market in United Copper Company. And it wasn't so much that United Copper Company and their failure to corner the market and the collapse was a big enough event to create the panic, but it exposed a broader issue of leverage in the system. And that's kind of where I am with Bitcoin and Michael Saylor and strategy, is that he's tried to corner the market. It's not a big enough event to create a panic, but it is going to expose how much leverage there is in the system, and probably create some ripple on margin calls. And that's what happened in the panic of 1907 when the failure to corner United Copper came about. And so I do think there's going to be a knock-on effect with margin calls if Bitcoin continues to collapse here. Obviously, where I would play that is with these big money center investment banks whose prime broker books have just ballooned dramatically. and I've published on that. You can see it on Wall Street Beats in my written work. But there's going to be a deleveraging event if this doesn't get contained, and that deleveraging event is going to hurt their financing revenues, which has been a big source of their incremental revenue growth. So
well, between that and silver too, Charlie, that's another big commodity that's just been like, holy crap, get on the ride and strap in tight, because man, these moves are insane.
Yeah, and that's spilling over to platinum, palladium as well. So even though Trump is proposing this minerals vault or critical minerals vault program, the metals are starting to act poorly in the face of that. So I do think there's a deleveraging event. I'm setting up for a very quick mini crack in this market. I'm very bearish, quite honestly. We'll see.
What does a mini crack look? I mean, what does that look like to you, Charlie? Is that like it takes a week or 10 days, or is it
2 or 3 days?
Even shorter,
maybe 5 days.
2 or 3 days.
In other words, you have to be there before it happens.
Right.
Otherwise, it's going to be too violent.
So you can play that. You could play that with 5% out of the money puts for the next 30 days.
Yeah.
Is it too late? Too high?
No, I don't think it's happened yet. I mean, what are we? We are down quite a bit. What are we down today? I can't read my. Put on my glasses.
Last I saw is about 0.5%.
Yeah, we're down 83 on the S&P. So we're breaking. I think we're breaking some important levels on the S&P here, which is the question is, when do you push the CTAs into selling? And I think it's somewhere around this level.
Yep. Okay. All right, Bakes. What do you? I know you saved a lot of people in silver with your selling on the way up. So thank you for that. What's on your mind this morning?
Well, the thing with silver, I talk about this, it's maybe too much, but I mean, I'm still, this is SIL. I'll just use this one. I'm up 90%. So I know people say there's carnage going on. This is what carnage looks like. Now, if you're in here, you get a problem. But if you're in here, no problem. So, right. It's all timing and perspective. Now, having said that, I'm going through a lot of things, and I'm going through 5,300 plus charts, 5,381 to be precise. They added 80 this past month. I have no sacred cows. If something looks better than silver to me, silver's going to be gone. But I just wanted to highlight a few things, and I think we got more to talk about with Charlie and housing and what have you. But I mentioned this, and this is a blatant plug. If you're a member of Wall Street Beats, or you're trying us out for 30 days, I mean, I talk about this in real time. Palantir people were salivating. CEO Karp was belligerent about the shorts and what have you. Full disclosure, I didn't listen to the call, but literally I put this into our chat room, and I said, it was a great report, but it couldn't get above the 200-day moving average. And so I said, that's a problem. And then it started to fade that yesterday, and we talked about it in real time on the chat. And then what's the level? When I said it took out this 145.14, look out below, and this is all time stamped. I've got it all right there. This is a problem. So when I say this maybe too often, if earnings don't make a stock goes up, what the hell will? And the earnings report of Palantir could not satiate the bulls. And so this was overvalued from here.
That's just
okay,
move. Yeah.
30 to 200. Okay, overvalued. All right, now the wildebeest is wounded, and the lions get to eat. And this is an Achilles blowout of a wildebeest, and they're going to start feasting on this.
Everybody looking to short that thing. who was smart enough not to get in the way of that freight train, has now got the green light. All systems go.
But I mean, literally, this was the event, earnings call, and everything is wonderful, but you can't make the stock go up. It was up 10% pre-market. It ended up 5, but it ended up below this 200-day. And to me, and I was screaming at my machine. I'm saying, now's the time. And I can't do it because I can't do individual stocks. And I tried to get through my wife's compliance department. I can do single stock ETFs. And they said, that's not going to fly. But for anybody so inclined, this is going down. And I can't believe this is going to be the last time this is over, because, the next earnings report is going to be even more scrutinized, and they really have to obliterate things. And for anybody, if you see rallies up to this 145, 14, 150 level, I think you can pick it off again. So, all
right, good stuff, good stuff, Bakes.
I hope someone made some money off of it, because I didn't, but I tried. I tried.
And for the freeloaders that are watching, Bakes makes a great point. We've got a chat amongst the team behind the paywall where they're talking to each other every day, sharing ideas, bouncing things off one another in real time. So if you want to see kind of the real good stuff, it's behind the paywall in the chat. So that being said, Bakes, what were you going to say? Go ahead.
No, it's. I keep thinking that everybody sees what I see, and then I'm realizing that's not the case. I mean, now this is 20 points in 2 days.
Yep.
I mean, it's real money. It's real, and if you're along, you got to seriously rethink your thesis.
All right, so let's move into a couple stocks we know everybody owns: Microsoft and Google. Microsoft has just been tattooed over the last couple of weeks.
Yeah.
Obviously, with all software stocks and the rotation out, where does that start getting interesting on the buy side? Is it too late to sell? Give us your thoughts technically on Microsoft here.
We closed this gap, on the last earnings report. See, this is what's supposed to happen. Earnings report surprise to the upside, and you gap up. Now we've reversed all that. We spent. I mean, that's 150 points, 400 to 550 basically, and we round tripped all this stuff. This gap down here on their earnings report, I don't think it's going to get filled for a while, in my opinion. I could be wrong, but I can't see how the narrative changes. And I'm on podcast after podcast, and I'm hearing people, and this is all it takes. Someone tweeted that they spent, a weekend and they built their own CRM, or they built their own, office suite, and it's good enough. It's not as good, but it's good enough. And
Mackey's been writing code on the weekends. That some of these software companies might be in trouble.
Yeah, and if I start writing code, I mean, that's probably the buy signal, because that's how late I'm going to be. But right. My son has said, Bake's dad, is this software thing over? And no, I mean, because and this is why historical perspective matters, and why you need people that been doing this for 30 years. This is software. Okay, now this is the granddaddy of them all, as Keith Jackson would say. That's everybody relying on your software, and no one's going to rip you out. Well, now some people are going to rip you out, or they're going to say, the price is not going up 8% a year. It's going down 8% next year. And it's just, it's just time. And oh, by the way, we're sitting on this trend line now that I drew it like that. So this is a good place for it to bounce. And, but I don't have a lot of confidence that it's going to stop here. I have nothing to base that on, because we just had earnings and people gave it a Bronx cheer.
If you want to play for a bounce, Bakes, do you see a level?
It ought to happen now, but I don't. You need to have, you need to have some blue lines down here.
Some stabilization with some volume.
I mean, look at this. Look at this bounce. This blue line is the up volume. It's feeble. That's a dead cat. The next level, this band down here is where I think it stops. Either here, with a gap down
What
at
level is
4
that?
bills. See, it just closed this gap up back here at the April May earnings report of last year, and then the next level is 350. So roughly 400 to 350. It better find a base or build a
Yep.
base. But I
Okay.
don't have a lot of confidence that that's happening anytime soon. I don't think there's any
All right,
rush
let's
to
move
do
to
that.
Google. Let's move to Google real quick.
Can I just make Microsoft, a couple observations on the software trade. First of all, the big hedge fund trade has been long SMH, short IGB.
Yeah.
And that's worked big time. SMH, though, now is starting to show some wear and tear. And whereas, the Microsofts are coming up against their 200-week moving average, where sometimes you have to do some work. Doesn't mean you stop there, but you have to do some work. I think there's going to be some stabilization in these software names in the next 1 to 5% down. And then I've also heard some of the bulge bracket firms are creating I don't have the details, but are accumulator products where they're starting to absorb the selling in Microsoft, and they're going to create I don't know if it's a VIE or a structured product that they're going to sell to retail. So I think this software, is getting a little bit long in the tooth, the short, and combined with that, the area that I follow very closely are the private equity names, like Blue Owl, that have gotten hit really hard on the software play, in that there's going to be, credit problems in their portfolios. And I do believe there will be credit problems in their portfolios, so, but those also are starting to, I think the RSIs on those are getting below 20 now. So, Bakes, if I was going to bet that there's going to have to be some stabilization or work being done here on software, it's probably within 1 to 5% of a bottom here. I think.
I think that's possible, but I think they're bounces and trades. They're not investments.
Yeah,
you can't.
I'm with you with that.
We're reversing decades of attitude and narrative. And this is a huge piece of the S&P 500. Everybody owns this stuff, and the speed and violence with which they're being taken out and shot. I think there's a lot of deer in the headlights. People saying, "What the hell do I do?"
Charlie said, the CTAs haven't started their forced selling yet, so that isn't. We got more to go.
I agree.
All right, let's go to Google. Show us your thoughts on Google here, real quick.
Google's the best of the bunch. It's the cleanest dirty shirt, as Johnny Cash would say. And the report was good. I guess they didn't like the CapEx number. I don't know. I don't know what they picked up. The volume picks up, but it's nowhere near its 200 day. This support at 296.12 looks pretty good to me. That these are still stairs that they're going up. And retracing this, it looks a hell of a lot better than Meta. That's down below its 200 day, for example. So, and I think Gemini is I think it's the winner, and I think one of the wild cards could be, going to Charlie's capital markets comments. OpenAI comes up and it is about as popular as a lead balloon or typhoid, and that IPO busts, and then my suspicion is SpaceX is going to be the lightning rod, and I think that probably goes over pretty well, just given the cap table and the percentage of the float and the Musk army. But an OpenAI deal that blows up, I think would be, you want to talk about investment banking going into a nuclear winter. I think that would do it.
Yep. And Altman had to do some arm twisting with Jensen to make that investment happen.
Yeah, that's getting really awkward. These conversations are getting really awkward. It used to be a love fest, and the love fest is over.
Yeah, all these circular deals. Anyway, all right, let's move on. Charlie, back to your housing thoughts.
Yeah,
A house for everybody. Here we go.
Yeah, I may be a bit early in these comments, but on the February 24th, we have the State of the Union address, and I think one of the highlights of that address is going to be how Trump expects to attack the housing affordability problem. There's probably five broad-based themes around he's going to propose. One is reducing the competition from the institutional buyer for homes, and he's floated that idea, so that's not new. The other is to use the GSEs in some manner to boost home ownership. Obviously, he's tried to narrow the mortgage spread by getting the GSEs to buy $200 billion of MBSs. But there's talk now about some sort of low rate mortgage product, maybe the GSEs could offer. Um, the third initiative is somehow to increase the housing supply, and that's an important one. A lot of people believe this is a supply problem. We've got a shortage of 4 or 5 million homes. And so the home builders themselves have been pushing, the Trump home plan, which would be a plan using private capital to build rent to buy type of housing. Um, the fourth is to reform zoning laws and improve, the use
Bingo.
of land lots, and I think that's a very important one. And then and the final one is some sort of subsidies like tenant-based incentives or housing vouchers using HUD, for example. So there's going to be a myriad of broad-based discussions. I mention this now only because in the last 2 or 3 days, when that Trump home initiative was floated, the home builders got a real big bid, and I'm a little bit leery about buying the home builders here, but they look constructive on a chart, and I'll defer debate on whether that's correct characterization or not. But if I'm going to play it, I'd rather play it through the home product companies, like Builders First Source, or Mohawk or Owens Corning, or I think that is a better, safer way to play it. Um,
Or what about
but
just the ITB, Charlie?
yeah, the
Just
ITB
the
or XHB. I mean, those are the
XHB or ITB? Okay.
yeah. Um, you know, I took a shot at LGI Homes a while back. I'm been in and out of it, so I'm trading these things just because I'm not convinced that the home builders are the right place to be, but they certainly act better. And I'll tell you why I'm not convinced. So let's go to some of the charts that I prepared, and then we'll come back to Bakes on the technicals. Jen, if you can put up the very first chart. So I don't know if you can read this, but this is data for, monthly data for existing and new home sales. The existing home sales data is in the white columns. The new home sales data is in the salmon colored columns.
There we go. There we go. Salmon. I love salmon.
And as you may know, we have not had new home sales data since October last year because of the government shutdown, and we may not get it again until the next date for new home sales is February 20th, just before the State of the Union. But they've been weak. We did get a pop up in new home sales in December. You can see on the top left the 4.35 million units of existing homes. Sorry, existing homes was a pop up, and that was very strong. So people got excited about that. But then subsequent to that, we got a drop in the pending home sales index in December. That's dropped 9%, suggesting that the start of the new year was going to be weak. The good news is, if you go across the top of the page, the inventory, the unsold inventory of new homes, the 1.18 million, is the lowest it's been in all of 2025. So there is a need for supply. Let's go to the next one because this table is probably too busy.
Charlie, can I stop there for a second?
Yeah.
I mean, I understand the job owning and the politics, but what you really need to do is go to, I don't know, 3,000 zoning boards and grab them by the lapels and tell them to stay home. That's what you need to do.
Absolutely. And there's been
Right?
talk that the federal government. So all of that is done, as you know, at the state level, and each state has different, and cities have different zoning laws. And so there's been talk that the federal government would, for example, withhold funding for certain states if they didn't push to change their zoning laws and
Blue ones, perchance.
I'm sorry.
Blue ones, perchance.
Yeah,
Blue
perchance.
states.
So yeah,
I mean,
I agree with you. Zoning laws have to be changed, and there has to be an acceleration of the approval process as well. And that would get the home builders a little more incented. Um, so as I mentioned, new residential sales data has not come out since October of last year because of the shutdown of the government. But you can see on the right-hand column, we've been sort of flatlining sideways in new home sales. So there really hasn't been a huge pickup yet in new home sales data. If we can go to the next chart, and Jen. So this is the National Association of Home Builders Index. And I give you the data monthly going all the way back to 2007. And you can see back then when we started breaking, below the 30s on the index into the, 20s and teens, that's when we had the housing crisis and crash. So we've been floating, today, let's fast forward to where we are today in 2025 and 2026, been floating around those low 30s. We've had an uptick recently in the index, but the uptick is not very encouraging. Couple observations about this index. 40% of builders have reported cutting prices in January. That's 37 index number. That's the third consecutive month that the share has been higher than 40% since May of 2020. So, there's still pressure on new home builder margins. The average price reduction, so builders are offering incentives. The average price reduction is 6% in January. That's up from 5% in December. And the use of sales incentives by home builders is with 65% of home builders are using incentives. That's the 10th consecutive month that this share has exceeded 60%. So the new home builders are still experiencing significant margin pressure in order to try and move product. So that's why one of the reasons why I'm a little bit wary of playing the home builders until I see what Trump has in his proposal that would be favorable to home builders. Go to the next chart. This is the pending home sales index. So this is for existing home sales. It sort of tells you what the contract sales are going to be 1 to 2 months out. So this is for December is the latest data point. And so it's telling you that January and February are likely to be weak. A couple observations here on this. This index fell 9.3% in December, which is the largest monthly drop that we had in quite some time. As you can see, it's near all-time lows, the pending home sales. So this is for existing home sales. A couple of observations. As I mentioned, the December data was worse than expected. People had been anticipating a slight increase on the back of the 835,000 home sales that were reported. The second is that what I mentioned is that this drop in pending home sales index in December, foretells lower sales of existing homes in the early months of 2026. The third is we're seeing homes have sat on the market. Existing home sales have sat on the market for an average of 39 days. That's extending from 36 days the month before. So it's depicting a stagnating home market. The fourth is that 16% of all homes under contract are being canceled, which is near an all-time high. So what it's saying is either the buyer is not getting qualified by their mortgage company, or the home that's being appraised is being appraised for a value that doesn't cover the LTV that the bank needs. And then finally, we're seeing sellers exceeding buyers by 47%. And that's, you're starting to see that really exceed that sellers exceeding buyers at the high end, which is where the market had been strong. So it's really hard to buy the home builders here because the data remains so weak. But people are anticipating that on the State of the Union address, Trump is going to come out with a major plan. And we talked earlier about trying to starve the long end, from duration product, in an effort to create a scarcity premium and lower rates. So if he can get rates down, and have some incentive plans, for builders, maybe the builder, trade works. As I said, I'd rather play it through the building product companies. So anyway, long-winded comments. I apologize, but
No,
Charlie,
that's
just
good.
looking
Great.
at the charts and the buildup. My guess, and this is all it is, but the president's State of the Union sounds like a sell the news. I don't think he can say anything that will make the street so happy that the next day they go out and they buy Toll Brothers and Pulte. I doubt it very seriously. You see how we're stuck in the DMZ here? It's between support and resistance. Yeah, the volume's picked up, but it's not monstrous. Relative strength is 68. I bet you it's a sell the news.
Bakes, that's exactly my sentiments. I feel like it's buy the rumor, sell the news type of, and it's strictly a trade. So I'm with you on that.
Okay.
And as you know, I've not been a big proponent of the home builders. Starting in September of 24, I had ushered in this theme of things that needed to be financed would disappoint. Those stocks were down 30 to 40% by the winter of 25 when the market was making new all-time highs. I got off that short bandwagon in the spring summer of 25. It really hasn't paid to be on either side of the trade, long or short, unless you're really good at trading week to week. So I'm with you, Bakes.
Yep. Hey, Bakes, what about the ITB? Same thing.
Yeah, very, very similar. Very similar. It's a nice bounce, but it's the relative strength line hasn't. It's in the DMZ. This is 100 to 120, and I know this doesn't make a lot of people happy, but you want to break above this 120 level. I don't think you get it. And look at the longer term.
Yeah.
It could be a base, but it's a very unconvincing one. So, of all the gin joints in all the world, I'm not going to walk into this one.
All right.
One last thing, just in terms of data. Starting on the 17th of February, we get the NAHB update. 18th is housing starts update. 19th of February is pending home sales update, and then the 20th is new home sales update, assuming it comes out. And then on the 24th is the State of the Union. So you got a minefield of data that week going into the 24th, which I don't think is going to be very constructive. So the trade is probably between now and the 17th. That's tough to play.
That's a tight window.
Yeah.
All right, before we go, we talked about this at the beginning of the show real quick, but I want to get Bakes' look at Bitcoin here, which is under a little bit of pressure. And Charlie's been talking about the sailor leverage issue for, God, as long as I've known him. And I was asking this to Ben, Charlie, do you know when or at what price sailors got some forced selling to deal with? Is there a price?
That, somewhere around 77,000 is where the margin calls start coming in. So these
we're at 66.
We're well, okay.
Are going to demand some collateral.
So what do you think about Bitcoin here, Bakes? Or you're going to pull up an ETF, aren't you?
Oh yeah, because this is the way most people can play it now. Yeah. And Wall Street did a great job. The ducks were quacking, and they fed them, about within 3-4 months of the top. But this is Greyscale, the granddaddy, and it could find support here, but all the narratives for Bitcoin are evaporating. And even the Bitcoin podcasters that have been, 10 feet tall and bulletproof, they've lost their hubris. They really have. I mean, I listen to a lot of them, but this is what intrigues me. And shame on me because I really wanted to wait to see this 200-day turn up, and it did so yesterday. And maybe that's just because I'm so rules based that I really don't bend them. But this is BITI, Pro Short Bitcoin ETF, so you can just buy it in an IRA or a 401k. And I mean, look at this thing. And I have not pulled the trigger yet, but and it's yeah, oof,
Starting to move.
double,
Look
and
at that
it's
volume.
imperfect. I'll give all the caveats. Sorry.
I don't know if you can pull up Hood, Robinhood, HOOD.
Oh, I talked about it the other day. Yeah, no,
Yeah.
I mean it's dog meat. It's dog
Yeah.
meat.
This is when I
21%
mentioned
revenues.
I've shorted in the past, and it is to me a direct play on Bitcoin falling apart, because a lot of the players that trade on the Hood platform are long Bitcoin, and if they get destroyed, the activity levels going forward with a lag are probably going to drop off dramatically.
Yeah.
And I'm sure that every pod shop in the country, has sailors, prospectuses and offering memorandums and what have you, and they're just waiting or not waiting. They're probably doing it right now, and they're just pressing levels to make him be a seller of Bitcoin. And I didn't listen to the call last night. I'll probably do it later today or tomorrow. But I don't know what you can say. I mean, it's a store of value. It's digital gold.
You see the train coming. You see the train coming for sure.
Yeah.
If one of the biggest holders of Bitcoin is forced to sell, just get out of the way. It's not going to be pretty.
And if he wasn't leveraged, he might have been fine. But he's leveraged, and so it's a double-edged sword. And now the other edge of the sword.
He's not an incremental buyer either.
And few people are.
Yeah.
Few people are. So
one last thought. I don't think it. This is similar to the RMBSs in the Great Financial Crisis, but the big underwriters of that convertible debt have been Goldman Sachs, JP Morgan, and Citi. And whether there's blowback to the underwriters, that's something to think about.
Yep. All right. On that cheery note, let's wrap it up, boys. Thanks for following us on Wall Street Beats, everyone. Check us out on our website, wallstreetbeats.com. Again, behind the paywall, you will find all of Charlie's great written content and Bakes' great chat content, and the chat content from all the pros on the team. So come check us out there. We will see you tomorrow. Happy Thursday, everybody, and stay safe.
Keep smiling. Thank you, Jen.
Thanks, Steve. Thanks, Bakes. Thanks, Jen.
Thanks, guys.
Bye now.